Appreciate everyone joining us. We're going to go ahead and kick things off and talk about some of the bigger issues that I think are impacting independent insurance agents in North Carolina as relates to the COVID-19 crisis. We do send our regrets from Commissioner Causey and Dr. Osborne. They both have some issues related to the crisis that couldn't be avoided today and were unable to join us. They had to cancel, and they hope to get rescheduled to be with us very soon, and we'll hope that that is the case. So joining me today in the conversation are both Joe Stewart, IIANC's Vice President of Governmental Affairs, and then also Rebecca Shigley, IIANC's Chief Operating Officer. And we're going to talk about, we'd started off with 5 things, but I think we added one to the list earlier today. So maybe 5 or 6 things that we think are the most, I guess, the most important things for agents to really be thinking about, understanding right now. And then we'll open it up for Q&A. If at any time, if you do have a question, I think all the participants' lines have been muted, but if you'll look down at the bottom, and everybody's probably becoming an expert at Zoom by now, but if not, if you'll move your mouse cursor down to the bottom, there is a chat button, a little speech balloon that you can press and enter in questions that way. Adam will keep an eye on those. I will try to as well, and we can certainly answer questions. So let's go ahead and jump right in. Joe, Rebecca, welcome. Thanks for being here. Let's talk about perhaps the biggest adjustment that agents and all businesses are having to work with right now. And it's an example of exactly how we're doing this meeting, and that's transitioning to a remote workplace, particularly in light of all of the stay-at-home orders. So let's hit on that topic. Joe, why don't you start off there?
Yeah, thanks, Abby. One of the things that we were working on, at least initially over the last several weeks, as local jurisdictions began to issue their own stay-at-home or shelter-in-place orders, 2 things really to make sure they all contained, and we were successful in this effort. Every order that we saw did indicate in some way that an insurance agency was a, quote, essential business and thus eligible to remain open even while the orders were in effect shutting down non-essential businesses. Some questions were raised about would people need information in their movement from home to work and such, and nothing that we've seen so far. Some local law enforcement agencies have been particularly aggressive, but generally speaking, there's not a pass or anything like that that's needed for an employee. Just to, should they come in contact with a law enforcement officer, explain that they work for what's been determined to be an essential business, and thus they are eligible to go from their home to the workplace. Most important to note is, because insurance agencies have been deemed essential businesses, they're not required to stay open. It's still at the prerogative of the owner of the agency, but could remain open, of course, practicing safe social distancing all the time that they are operational. The governor issued a statewide stay-at-home order on March 27th that will last in effect through the end of April, that made it crystal clear that insurance agencies are essential businesses and thus could remain open. We've continued to work with individual agencies that have had some questions about this on a case-by-case basis, providing whatever documentation they needed. But so far, everything that we've seen would give clearance for an agency to remain open and operational should they want to.
Great, Rebecca. One of the challenges that a lot of agencies have faced was that they were not exactly geared up towards a remote working environment and have had to make that transition kind of quickly. What kind of advice or suggestions do you have for those agencies that are still maybe struggling with how to make that transition?
Well, I think the biggest thing is identifying the equipment that your staff is going to use. Do they have equipment at their home that they can use as efficiently as they used in the office, 2 monitors or a webcam? And if they don't have that equipment, finding a place that you can supply them with that equipment, or if they have a laptop that they could bring home that has a webcam built in. So I think number one is just identifying the equipment needs, then getting that equipment to them, because unless they have the proper tools, they're going to struggle to work as efficiently as they worked in the office. And then just identifying the collaboration type tools out there, such as Zoom for having meetings and webinars. There's collaboration software like Slack and Microsoft Teams, things like that. So I think the biggest thing for staff is trying to get them set up at home, similar to how they are in the office, that they can work somewhat at the same level of efficiency, and then also make sure that they're still adhering to procedures as far as saving documentation. So if they're using their home computer, that there's a way to get that documentation that they're using on a home computer into the office computer or agency management system.
Yeah, one of the first things that we had talked to the department about after this was once an agency has made the transition and has either all or most of their employees working remotely, perhaps they're not keeping their normal office hours, perhaps their physical locations are completely unmanned. What are some of the best practices that agencies need to be adhering to if indeed their office is not currently staffed and they're trying to serve their clients remotely?
So one of the things that when we talked to the department, they requested is that it would be nice for the agency to post a sign on the door if they're going to be completely closed, letting customers know the phone number that they could reach the agency at, and that the agency is still staffed to handle customers' questions during that time. Perhaps a list of contact numbers of insurance companies, but just that the agency should recognize that even though their doors aren't open, if their customers come to the door, they can still have a way to get their questions answered. And then the department also asks that agencies and insurance companies make available other methods for customers to pay their payments, whether they have electronic payments, refer to the insurance company for their online payments, but just to work with the customers to try to make sure that because the office is closed, they're not having their policies lapse just because they can't physically get that premium to the office.
Hey, Joe, one comment that you made during your remarks was about how the governor's orders made it crystal clear that insurance agencies were essential businesses. I mean, they were explicitly listed in the governor's order, as we had been assured they would be during our communications. One of the things that I found kind of odd about the governor's orders was the fact that his order, that the statewide order, did not automatically supersede any local jurisdiction's order. Can you speak to that? Can you speak to that a little bit? Because that's kind of bizarre.
Yeah, no, that was a little bit of a surprise. Generally speaking, anytime that there's a proclamation made by the chief executive of the state of North Carolina, the governor, it does supersede any locally issued order. I think as a matter of deference, the governor wanted to provide local jurisdictions the ability to impose more stringent standards if they chose to, given a local situation perhaps being more specifically difficult to deal with in some other location. And Commissioner Causey, to his great credit, was in constant contact with the governor about the essential nature of the insurance agency business, that people would need still to be able to bind coverage. They would be able to need to pay premium. As I'd said, we haven't seen anything at the local level that is remaining in effect as a result of the way the governor issued his order that is impeding the insurance industry or the insurance agency business from being able to operate. There are a few locations, like on the Outer Banks, where local enforcement of provisions, it's generally more associated with tourists not being able to come onto the barrier islands or other areas in the aftermath of a hurricane. But in some jurisdictions, there is a limitation on being able to access a particular part of a county, but that's more for people who are there for the purposes of occupying a rental property as a tourist would, and not so much having to commute from a location outside of a county into a county to work. But we've also been part of a coalition with the North Carolina Chamber of Commerce, with some other business trade associations, most notably the North Carolina Retail Merchants Association in providing information to local jurisdictions. Correspondence went out through the League of Municipalities and the County Commissioners Association, the two groups that represent local governments throughout North Carolina, stipulating that there needed to be a standard practice relative to what was considered essential and the free transport of people from their home to their work locations. And so correspondence has gone out with the independent insurance agents of North Carolina as one of the signers of that letter, asking each municipality and county government to adhere to that same standard in terms of what is and what isn't an essential business, as is described in the governor's order. So in effect, even if a local jurisdiction decided that their order needed to supersede the state order, we have requested and generally gotten agreement that the standards relative to what is and isn't an essential business would remain the same throughout the state.
Okay, great. Thanks. Let's shift gears a little bit and talk about how the COVID-19 crisis may impact agents to okay, Bobby, you're my distracted. You got me distracted with your comment coming through. How the COVID-19 crisis could impact agents from a licensing standpoint. So there are a couple of things I want to talk about. One, obviously a lot of classroom training, designation programs, renewals, and things like that have been canceled or postponed due to the crisis. And then two, let's talk about the ability to get new people licensed right now, because I know we're experiencing some issues in both of those areas. As the former Deputy Commissioner over the Agent Services Division, I'm going to ask Ms. Shigley to open up some comments on that.
Okay. Well, first, as far as the CE issue is concerned, IIANC was well ahead of the curve there, reaching out to Commissioner Causey and Chief Deputy Commissioner Dr. Michelle Osborne and getting their agreement for IIANC members, and it ended up benefiting all of the agents in North Carolina to get CE that was previously approved for classroom automatically approved to be delivered via a webinar, and have the association be responsible for monitoring attendance that way. So that way we're still able to offer CE to our members, so meet their requirements. And then also at IIANC's request, extending the CE Compliance Day date for anyone that has in March, April, or May, it is until the end of June. So from that regard, the department has worked with IIANC, making sure that members' licenses don't get canceled for CE during that time period. In addition, our Director of Professional Education, Luann Wooters, and her staff have worked very hard in rescheduling classroom courses and making them available online in some cases. We've given out free promo codes to flood and ethics classes, as well as E&O classes, so our members can still complete online CE education during this time period. As far as the license,
before we jump to the licensing, let me ask one question there. So my license renewal is June. Let's assume that someone's license renewal is April, and they were scheduled to take classes this month to complete their continuing education requirements, and now that those have been postponed or delayed, what do they need to go ahead and file for their renewal and make that filing without the hours completed?
So in North Carolina, insurance producer licenses don't require a renewal application or a renewal fee be paid. Licenses are renewed at the end of a compliance period once CE is verified. So there's nothing that they need to do. Any licenses that don't have the required 24 hours of CE credit by the end of April, they're not going to cancel those licenses. They're going to continue as active, and at the end of June, June 30th, any CE that had been due at the end of March, April, or May would then be due in June.
Gotcha. Okay, great. Thanks. Let's talk about the licensing issue for new people coming into the business, a new hire at an agency. I know that's a little problematic right now.
So first of all, Commissioner Causey had received requests through the Agent Services Division for the department to extend temporary licensing to anybody that's unable to get their license. And the difficulty the department is having right now is the sheriff's offices have basically stopped any fingerprinting. And North Carolina state law requires that for insurance producers that they have their fingerprints submitted for their first line of authority license. And because the fingerprints can't be submitted, and that's a statutory requirement, Agent Services Division is not able to issue those licenses without that proper background check. And then the second issue is that Pearson VUE who is the vendor to do the examinations for insurance producers, they have stopped giving any insurance producer examinations on their in their test locations. I think they originally said April 15th, and then they're going to reevaluate. But based on the governor's order and the current conditions, I'm imagining that they might not open those test centers again, and they will extend that further. I spoke to the current Deputy Commissioner of Agent Services Division, Angela Hatchell, and she told me that the challenge that they're having is that there are some certifications that Pearson VUE can do through an online proctor, but they are not to the level that they would feel comfortable doing it for an insurance producer license to verify identity and make sure that that person is qualified. They're more for designation type courses, things like that. So those are the challenges. The department is very aware of those and is working closely with Pearson VUE to see if there's other secure options that they can offer.
Okay, great. Joe, anything to add to that, or shall we jump to the next topic?
Yeah, I think this, from the conversations I've had with the folks at the department, they're certainly aware of the difficulty that this places some agencies in that have brought folks online, and they were fully expecting to be able to get them to start work and now are not able to. The challenges that our members face with finding qualified people and getting them into the agency and starting to work, notwithstanding, it's a little bit of a challenge to keep somebody interested and engaged and productive while you're still paying them if they're not able to start really effectively working within the agency. The department is certainly sensitive to these issues and has expressed a willingness to continue to evaluate whether something else needs to be done. But this is a bigger issue than just the North Carolina Department of Insurance. The National Association of Insurance Commissioners has weighed in on this and expressed concern about not wanting to lower the standards relative to insurance agency license issuances. So, but this is on our list of conversations that we're having with the department almost on a daily basis, just to see if they have had a different opinion as this goes forward, if there is some other thing we need to do to try to address that concern.
All right, great, Joe, thanks. Speaking of the department and directives, let's talk about the big one that came out, I guess, most recently, which was the premium waivers. Who wants to jump in on that one first?
Rebecca, why don't you start there?
Okay, I'm happy to do that. Traditionally, that particular order from the department is the one that agents find the most confusing, companies find the most confusing. In years past, there's never been an FAQ that the department has put out regarding that bulletin. Insurance companies and agents are kind of just left to their own to read the actual statutory language, which isn't always clear, and make those interpretations themselves. This year, the department did a great job. Fred Fuller, Deputy Commissioner of the Property and Casualty Division, put out an FAQ document, which I thought was very helpful. It's posted on our COVID-19 Resource Center page under regulatory updates, and kind of goes through about 10 questions related to the deferment of payments specifically. And it makes it clear that this is not a waiver of a premium for a consumer. This is at the consumer's request that they defer payments for a period of 30 days. And it also applies to insurance company requirements, such as they have to file a claim document with a certain period of time or meet other requirements. It applies to non-renewals. It applies to cancellations. Pretty much any time requirement that's put out in a policy, it defers those that action for 30 days. It applies to insurance companies, premium finance companies, surplus lines companies, collection agencies. So pretty much any entities that's licensed by the department, this order applies to.
Okay, great, thanks. And the FAQ is very helpful, and I was glad to see that was produced. Joe, anything to add on the premium deferments?
No, as Rebecca said, in the inquiries that I've gotten from our members, that's produced the most questions so far, just procedural and administrative and operational questions. I think the anticipation of the statute was for those situations where a disaster has been declared, but it was more along the lines of a hurricane where trees were down. And so people literally could not get to their insurance agency to make payment. This is really more of a situation involving economics where people are having perhaps a difficult time paying their premium, not so much their inability to be able to get to an agent's office or even make the payment electronically. The question may come up if the disaster declaration is extended, if the governor goes beyond the original order of staying home to extend it for another 30 days, which is distinctly a possibility at this point, taking it all the way to May. The question may be, does the department feel comfortable continuing the stop order to extend the period for non-renewal and cancellation? But again, it's something we're closely monitoring, and we'll weigh in as the situation may necessitate.
All right, great, thanks. Speaking of governmental action and government, the government involvement in trying to alleviate some of the issues related to the economic crisis that we're in right now. I mean, really, we've got two crises, right? You've got the COVID-19 and the pandemic crisis, and then you've got the economic crisis that is a result of the COVID-19. Let's talk about federal response, and particularly maybe some of the provisions of the CARE Act. I know that over the last 3 or 4 days, that has been a really, really hot topic of conversation, particularly with the provisions regarding payroll protection and what the eligibility of various businesses may be there. Joe, do you want to start off with I guess some overall comments, and then probably good to start pointing members to some more to some resources where they can get some more detailed information beyond what we'll be able to provide in the scope of this conversation.
Yeah, absolutely. Well, one of the dynamics of the attempt at the federal level to respond to this crisis and provide some relief for the economic impact, as you'd indicated, Albie, the sort of the third provision, the CARE Act, over $2 trillion in various programs. Within that was $350 billion for what's called the Payroll Protection Plan, which is a program administered by the Small Business Administration. In effect, it's money that a business of fewer than 500 employees can borrow with the potential of having the loan converted to a grant by meeting certain qualifications. First and foremost, the intention of the program was to make it possible for small businesses to continue to retain their employees, in effect, keep people from having to go on to unemployment by loaning this money to businesses so they could continue their payroll, and then at the end of the period have that determined to have met the qualification under the PPP program, and thus the loan to be forgiven, in effect, that the business is able to not have to repay the money. First and foremost, the thing to remember is these SBA programs are administered through banks, a certified bank that has gone through a process with SBA to be determined to meet certain standards so that they can originate these types of loans. So for an agency that's looking at this, and I've gotten calls from members not only curious about this program for their own agency business, but wanting to be knowledgeable about it so they can offer it as a recommendation to their commercial clients who may be looking at some very difficult economic times to try to keep things going, as it were, without having to lay off or reduce their staff. The first and foremost thing to remember is the best first conversation you can have is with your financial institution. If you're an agency, talk to your banker about this program. If they are a bank that originates SBA programs, what we're hearing nationally, not just here in North Carolina, is that the demand for these resources is so significant. Many banks are prioritizing the requests based on whether or not you're an existing customer. So working through your own bank, if it is a certified SBA institution, is probably best. Read an article today of the $350 billion that the CARE Act included. Bank of America alone, and this program first became authorized just last week, Bank of America has issued 178,000 loans totaling over $3 billion. So almost 10% of all of the money made available in the CARE Act was loaned out just through Bank of America and just since last week. So significant amount of demand for this. It is time limited. June 30th is the deadline to apply. So if your agency meets these criteria, I would really recommend to anybody that they seriously look at this and finding out more from their financial institution what the requirements are and whether they qualify for this program, and to begin the process of putting an application together. SBA, sometimes that process is daunting. It is a federal program, so there's a lot of paperwork and a lot of documentation that's necessary. But the intention that Congress had, a very bipartisan way, was to make this money available for small businesses to try to preclude them from having to let people go. So if you have the ability to put the documentation together and apply for these funds, we strongly encourage you to take a look at it. The final thing I'll add is, it looks as though from news accounts today that the U.S. Treasury is already looking at a request to expand on the $350 billion authorized under the CARE Act to add another $200 billion in availability, in large part because the demand has been so great here in the first few days. This is probably the simplest thing that an agency could look at in terms of federal assistance at this point, is applying for one of these PPP loans that would ultimately become a grant. We have provided a lot of information on this and other types of federal assistance that might be available on our resource page. So I strongly encourage members, take a look there, but have a conversation with your banker as soon as you possibly can.
Yeah, I think the short answer is, Joe, is that a business is potentially eligible to borrow up to 250% of monthly payroll.
Yes.
And then at some period in the future, 60, 90 days out, they basically check to see if you're still making payroll taxes on the same number of employees that you were before. Exactly. And if the number of FTEs within your business is the same or greater, then at that point the loan becomes a grant.
Yeah, exactly. You've touched on exactly what Congress was hoping to do, was to provide an economic incentive for small businesses to hold on to their staffing so that people would not spill over into the unemployment rolls, which has also been dramatically tapped into federal resources. What we want to preclude, I guess, as a country, and what the Congress is trying to help avoid happening, is that so many people are laid off or made unemployed that the benefits at the unemployment level are too rich and it's harder to get people back into the workforce. The thinking is, if you provide an economic incentive like this program for employers, they'll retain their staff through the most difficult days of this. And so when things are back to normal, it won't be so hard getting back up to speed because your employees are still available to you.
Yeah, and as one of the participants has chimed in with the chat, really more of a comment than a question, but not surprising. Demand has been so great for this program. I know there are a lot of banks out there that are completely overwhelmed. There are web portals that are completely overwhelmed. As of Friday, our conversations with our banker still indicated that there were rules that the feds had not completely decided on about the administration of this program. So I was kind of surprised to hear, Joe, your numbers from Bank of America, because I've been talking to people and you can't even get applications, completed. So I'm sure there'll be a swell of interest, and who knows how long that is going to keep the system kind of bogged down or overloaded. Rebecca, anything else on the payroll protection plan or federal response?
Right, not really, but think of IIANC as your place to look for all this type of information. The COVID-19 resource page has all kinds of information, links to resources from national, as well as the information that here at a state level we're able to provide. So regarding all these issues, we're trying to compile those resources so you do have that one place here at IIANC that you can go to for these type of questions and resources.
Yeah, one element of the federal response too, and I haven't gotten a lot of questions about this. Joe, you and I spoke about this yesterday. You had not got any questions about it, I don't think, but there also have been other provisions from the federal response and some of the first relief bills that were passed that extended family medical leave.
Right.
I mean, there were all sorts of things that I haven't been asked questions on. So I guess for those agency owners that are listening, please pay attention to what the feds are doing. I know that right now with this with the Triple P plan, there's this optimism out there of a lot of business owners that the feds are giving away free sacks of money. So everyone's super interested in that. But there's a lot of other things. So I would ask all of you, do you have your new Family Medical Leave Act poster up? Because there's some changes, and now that's a requirement. So there's lots of stuff going on that we need to pay attention to. And to be perfectly candid, man, the information is just coming at us so fast right now. It has for the last few weeks. It's been a little difficult just to keep up with, just from the sheer volume of it. Joe, we talked about the federal response. What's going on at the state level? Is the state legislature anticipating a special session to see if there's anything that they could or should be doing in terms of providing either direct relief or some type of tax break or tax incentives to also help during this time of economic crisis and employment uncertainty?
Yeah, State House Speaker Tim Moore decided that as a way to get ready for the session that was scheduled to start on April 28th, the usual what's called short session. In the even-numbered years, the legislature comes back to make any second-year adjustments to the state's budget. The odd-numbered years, the state originates a biennial budget to cover the 2-year period. And so the short session in the even years is really just intended to adjust the budget. But that having been said, the April 28th date had been set long before the COVID-19 situation had occurred. But the House Speaker decided that he would form what he called the COVID-19 Special Committee of the House. About 74 members of the 120 were appointed to this. Working groups were formed on the various topic areas, and they've been meeting telephonically over the last couple of weeks. I've been monitoring these conversations, and it's everything from looking at the state response to COVID-19 to make sure there are resources in place, not just for the public health issues, but some of the requisite issues like the unemployment benefits system, making sure that the Employment Security Commission is applying the appropriate resources to honor claims and to process people to begin the unemployment check process. But it looks like at this point, in a lot of conversation about various aspects of what the General Assembly might want to consider at this April 28th session to deal specifically with issues sort of in two major categories. One, any adjustments to the state budget or regulatory or statutory systems. To your point, Aubie, are there things that need to be done to provide economic assistance to businesses and individuals that have been impacted by this? Some initial discussion about the possibility of tax offsets. There's already been the decision made to delay the requirement when state taxes have to be filed until July. But there may be some other ways that the state is able to address the economic impact on business from a taxation standpoint. And certainly there will be conversation about the necessity of direct economic support from the state, either because there's a specific need that's not met by the federal programs, or there's a federal program for which a state match requirement is an element. And so the General Assembly will undoubtedly focus on a package of those types of legislative proposals when it comes back on April 28th. The information that we've gotten so far from conversations with some legislators is it looks like this session on the 28th will only last a few days, that they want to make sure that as the legislature is appropriately respecting the necessity for social distancing and not sending mixed signals by convening at a time when everyone else is being told to stay at home. So I think it'll be a quick affair. And they're even going to talk about extending the period. Generally, when votes are taken in either the House or the Senate, they're only given 10 or 15 seconds to vote. They're talking about making that an hour or more so legislators can come into the chamber in shifts, as it were, to avoid all being in the same place at the same time. So that kind of awkward logistical construct probably means they can only meet a few days. There's not much work that can get done in a timely fashion with those sorts of logistical considerations. The Senate chose not to meet, but in this interval as the House has, but they are closely monitoring it and having several conversations about public policy issues that are likely to want to be addressed at this April 28th session as well. And I will say, just as a quick shout out, if there was ever a time when it was valuable for us to have IIANC members in the General Assembly, it's been during this process. I'm in constant communication with our member agents, agency owners who are serving the General Assembly, and they've been really responsive in providing information back on what's being discussed that might have an impact on agents. They are very keenly aware of the issues that matter to agents because they themselves own agencies, but also as a result of our relationship with them, having members in the General Assembly has been particularly helpful as we try to navigate this very confused and frustrated and anxious time, as legislators have come up with ideas that might adversely impact agents and agent businesses. Our members have been stalwart in their support for guarding against anything that could adversely economically impact our membership.
Great, thanks for sharing all of that, Joe. Rebecca, anything that you want to add to the Triple P or the federal response to this?
I think you have covered it all. Like you said, the information is just coming so fast. I will say that from the federal response perspective, we have gotten a lot of questions on any possible legislation regarding making insurance companies responsible for paying business income claims. So I know Joe is monitoring all those, as well as the Big I counterparts at the national level. We are getting those worried inquiries from our members regarding what the federal legislation might impact also.
Yeah, let's talk about that. That's a great transition into what one of the main things I wanted to talk about next as well. We covered this a couple of weeks ago in the E&O panel discussion because there are definitely some E&O implications to this. Joe, do you want to take a minute and talk about this big group that has organized, this group of restaurant owners primarily, that has organized surrounding this issue of business income, business interruption insurance, and maybe also talk about the legislation in New Jersey that everybody's kind of taking a look at right now, and what may come of that.
Yeah. This is actually something that was brought up at one of these House Select Committee meetings, and it's the issue of business interruption coverage, principally for restaurants and hotels, where they were impacted immediately as a result of the COVID-19 situation, and felt as though their business interruption coverage should provide for the lost income that they'd experienced as a result of that dynamic. Not to get into too great a detail about this, but it does appear that most of these policies do preclude viral and bacterial infections, that those are not covered areas where the business income would be forthcoming from those policies. And I think in the immediacy of the economic impact, a lot of restaurant owners used it as an occasion to claim that the insurance companies, were somehow unfairly interpreting what the policy provided for as a way to withhold having to make payment because so many businesses had been impacted. It seemed pretty clear that in most cases, the policy simply didn't provide for those types of losses. But that having been said, we see this in the aftermath of a lot of natural disasters as well. Tremendous sympathy for those businesses that have had a direct economic impact and a desire to try to find some remedy. The two levels of conversation that occurred on this were, one, what if, and this is the speculation that some legislators were having, and you referenced New Jersey, where legislation was specifically discussed to this regard. What if a legislature changed the law and said that a carrier was compelled to honor the claim, even if it was not included among the coverage in the insurance contract? The bill wasn't introduced. It was discussed. A couple of other states, this has come up. It was mentioned, as I said before, in one of these House committee meetings, what if we were to do this here in North Carolina? The Big I in Washington, our colleagues that track federal legislation, and also Wes Bissett, who covers what's going on in the states, has provided us a lot of information about this. And again, the value proposition of having our own members in the General Assembly immediately provided them with all of the detail on this topic and said, you need to monitor very closely any conversations that are taking place among legislators as to this. It seems, generally speaking, the provision is intended to, ironically, address the fact that the feeling is that state and federal resources that might be made available to these businesses that have been impacted economically would not be as forthcoming as an insurance claim, that insurance carriers would be better at getting these checks in the hands of business owners. At the end of the day, what it would require is retroactively changing the terms of a contract, which raises the question of even constitutionality. The U.S. Constitution does say in Article 1 that states can't do things that impugn contracts into which two parties have entered voluntarily. The fact that it would probably mean some relative insolvency at the insurance carrier level, the claim activity for these types of losses would be astronomical by comparison with what's available in the surplus for these carriers. And again, the premium was not charged with the expectation that this would be an eligible claim. So the company, in effect, did not collect the money necessary to indemnify the company from that loss. And so for a lot of good practical public policy reasons, as well as constitutional law, it seems like a bad idea. But that having been said, General Assembly and legislators are looking for ways to provide some relief to constituents that they see as suffering. And so we're guarding very carefully any conversations at the state level about even going down this pathway. The Big I is working with some carrier organizations and other business groups with the proposal to create what we did in the aftermath of 9/11, which was to create a recovery fund to which businesses could apply for relief if they'd had economic impact as a result of that. There's also been some talk about maybe adjustment to the federal law relative to the terrorism backstop that was created after 9/11. So maybe not retroactively, but prospectively, there would become some a way for a carrier to offer this kind of coverage because there would become now a federal backstop. All of this is very speculative at this point, but the issue may become ripe over the next couple of weeks as Congress looks at a fourth relief bill, which may include appropriations at or above the $2.2 trillion that's already been appropriated for all of these various things. If there is, in fact, a piece of legislation forthcoming, there may be the vehicle for addressing this issue, either creating a disaster recovery fund or attempting to do something about this issue prospectively. But again, it's on our watch list of issues and something we're monitoring very closely.
Great, thanks. Thank you, Joe. Rebecca, anything to add? You know what? There is actually something I'd like for you to talk about. One of the things that we talked about from an E&O standpoint, there had been a number of carriers that had sent out bulletins advising agents to advise clients that business income, business interruption due to the COVID-19 crisis or the coronavirus was not covered, and advising agents to advise their clients of that. What's our recommendation on that? How did we address that in the E&O seminar? And this would be our recommendation regardless of this potential movement to have these claims paid retroactively, but particularly in light of the fact that there is this big movement to potentially have these claims paid retroactively. How should agents address that from an E&O standpoint?
Right. So we had a great panel of experts on discussing this type of impact. We had Mike Medford, an attorney from Manning & Fulton. He's also been the E&O panel for Westport Insurance Company for almost 30 years. We had Stuart Powell, our technical expert, talk about the technical terms regarding this. And we also had Richard Lund, who's the director of professional liability at Swiss Re, over the Big I professional liability program. And we talked about these different issues. The experts all agreed that it is clear that it is not the agent's duty to handle claims. So for the agency to put themselves in the position where they're advising insureds that something is or is not covered under a policy is putting them right in the path of potentially having an E&O claim if down the line an insurer decides to cover it. Maybe their interpretation's a little different. Maybe there was an endorsement. Or if the federal government steps in and there's case law or there's legislation, regardless, either way, it is not the agent's duty to settle claims. So we're advising that you let your commercial customers or your personalized customers who might have loss of rents or those type of issues know that you're happy to help them submit a claim, that generally and typically these claims are not necessarily covered, but you'd be happy, you'd be happy to help them cover a claim so the insurance company can make that determination. So
Yeah,
the webinar is posted on our coronavirus resource page. It was recorded, as well as there's a commercial letter to clients out there and some do's and don'ts on your E&O. And please share those with your staff. I think they'd be really helpful in handling any type of claim situation, but especially this particular unprecedented type of event.
Great, thanks, Rebecca. Very good. Last thing I wanted to talk about, and this was kind of new. We added it to the list of things to discuss this morning, and then after this we'll open it up to Q&A. But Allstate just announced that they were going to return hundreds of millions of dollars. I think it was maybe $600 million in auto premium back to policyholders based on the fact that nobody's driving as much. So cars are being parked, and it's kind of funny. It's almost like they're going to some usage-based insurance model, some kind of a metro mile model, but they're doing that retroactively based on, we've all seen the Google data, right? Google reporting that in a lot of areas where the stay-at-home or shelter-in-place orders are in effect, that movement is down 75, 80% in a lot of those places. So Allstate, for one, has decided they're going to return $600 million in auto premiums to customers. Are they going to be able to do that in North Carolina? Because we're known as one of those asterisk states where maybe companies don't necessarily have some of the same flexibility to be creative on certain policy provisions as they do in other states. What are your thoughts on Allstate making this announcement? And then two, what do you think the likelihood that they'll be able to do this here in North Carolina? You're both muted, by the way. I don't know why.
So
I didn't do it.
I'll weigh in here. And it's been my experience that North Carolina is a state that requires approvals for rate filings. So this would be considered a rate deviation that the department would normally have to review and approve. They are normally very receptive to rate deviations down and in favor of the consumer. But I do still think that the department has to approve this as a rate deviation.
So will this be a rate deviation that Allstate makes specifically, or they'll have to go through the rate bureau, right?
Right.
So I don't know. It seems to me that if anything, it'll be just maybe an extra couple of steps or two, right, to be able to implement this in North Carolina, best case scenario.
Right. So companies have the ability to file rate deviations from the rate bureau rates, and generally they are things that expand on discounts or special programs and things like that. So they do have the ability to file those rate deviations directly with the Department of Insurance.
Okay. Joe, thoughts on this?
We may see a number of carriers follow through on this on the PNC line. Just the brand opportunity, the bolstering of the image of the company by being respectful of the fact that people are experiencing economic hardship. And I guess I'm not an actuary, but it makes sense. If people are driving their cars less, the risk profile is less. And so it probably is substantiatable on an actuarial basis. And we may see a number of carriers do things like this.
It'll be interesting if the COVID-19 crisis, if one of the prolonged outcomes is that we move more towards a usage-based automobile rating system, which is essentially, I think, what Allstate's kind of recognizing here. When people don't drive as much, there's much less likelihood of there being a claim.
Right.
So interesting to see there. All right. At this point, I want to just open it up. If there are any questions from the attendees, we're happy to take those. Or Joe, Rebecca, if you guys have any final comments that you'd like to make. I do see at least one question. So why don't one of you come up with a final comment to make while I read the question and see how we need to pose that.
Well, I think it goes without saying, for anyone watching this, if there are issues relative to your individual agency, big or small, if it's related to this and we can be of any assistance, do not hesitate to contact us. We've been handling a lot of issues over the last couple of weeks where it was specific to the agency, but that's part of the value proposition of having us here working on your behalf is we'll immediately turn around whatever we can, whether it's something with the Department of Insurance or a question about what's the appropriate approach. We're here to be a resource to all of our members throughout this crisis.
Yeah, absolutely. Thanks, Joe. Actually, the note that came in from one of the attendees was in regards to automobile insurance, saying that they had found that a number of carriers were being very willing to allow customers right now to change the usage symbols on their auto insurance policy. So instead of using a car for business or for work, or I'm using it for work, and I'm driving 50 miles a day round trip, to say no, I'm just using it for pleasure, and I make my Walmart run looking for toilet paper once a week. There's certainly a risk profile difference there. So, right. All right. Hey, as Joe said, we're here for our members. We're here for independent insurance agents. If there's anything that you see, if there's a problem that agents are having, if there is a regulatory, legislative solution that you think could be put in place, or if it's not a legislative, regulatory, if there's just something that you think we could do as an association to help members through this difficult time, please do not hesitate. I mean, as a matter of fact, I implore you to reach out to us and let us know. We are really embracing this opportunity. I mean, we've engaged with so many members, and we hate that it's under these circumstances, but it's been fantastic to talk to people that we don't normally talk to, and to be able to give some guidance and some advice and how to navigate these difficult times. So thank you all for your attendance. We appreciate it very, very much. And please reach out to Rebecca, Joe, myself, any member of the IIANC team if there's something we can do to help you. And I hope that you and your families and your agencies all stay healthy and well and happy during this time. And we look forward to seeing you soon. Thank you very much, guys. Have a great day. Thanks, Joe, Rebecca. Appreciate you guys.
Thank you.
I'll see you soon.
Bye.